In this video, I'm just going to talk about how to be successful in trading. So stay tuned. Hi guys, I'm Shami. Welcome back to the YouTube channel, the NZDayTrading101. If you haven't subscribed, then hit the subscribe button below and also like the video as well while you're at it. So today I just want to talk to you about what makes a successful trader. So there's a few things that I feel is very important to be a successful trader going forward. And I just want to start with number one. So number one is basically being able to cut your losses quick. And that simply means that if you are in a trade and the trade is going the wrong way, you should have the ability to cut your losses. Because what's going to happen is if you don't cut your losses, then you're going to be stuck holding a loser for a long period of time. And this is usually an opportunity cost because you could be using that capital, be trading in other things. Number two, not sizing your positions correctly. So what I mean by that is basically if people have an account size, let's say like $1,000, they'll be risking way too much on the trade, and if the trade goes the wrong way, then they lose a substantial amount of their account. So basically when you are trading stocks, usually the basic rule of thumb is you want to be risking 2% of your account size. The reason why 2% is a good amount to risk according to your account size means that you can stay in the game long term. Number three, so this is an important one. So traders don't have a consistent strategy. So if you don't have a consistent strategy, then there's no way to know that are you just trading anything? Are you trading stocks that are going down or going up? Or do you have a consistent strategy that actually works over and over and over again? And if you do have a consistent strategy, then do you have an exit strategy if the stock starts to go the wrong way? So this is quite important, having a strategy, because what happens is if you have a strategy, you're able to plan out your trades correctly. And you're not just going into any sort of trade just like, oh, this one looks like it's looking good, I might just get into that and it'll go up. It doesn't work like that. You've got to look for the correct patterns, you've got to look for the correct liquidity, you've got to look for the correct sort of stocks to trade so that you can take full advantage of that when you're trading. So that's really important as well. Number four, emotions. So emotions are huge because a lot of traders, because we're trading without like a capital, it's a hard-earned money, we work our ass off to like make $1,000 or 2,000, or 2 months, you save $2,000, and you finally put that $2,000 into the markets, and then like your stock drops, and all of a sudden like you're down like $400, you're like, oh shoot, So what's gonna happen? You're gonna freeze. You're like, oh shoot, I'm down $200 or 400. Maybe trading isn't for me. I can't handle it. So make sure that if you are trading, try and use like risk-free money. That just basically means use money that you can afford to lose. You're ensuring that you're leaving your emotions out, because when you start trading for the first time, you're going to probably lose money. Like with me, with new traders in general, what happens when you trade for the first time is you're probably going to lose some money at the start, and you'll slowly kind of go up and down. You make some gains and you make some losses, and then you'll slowly start to see consistency in your trades, and you'll start to see your capital just going higher and higher. So with trading as well, because you're losing, you're risking 2% of your account size, as your account size grows as well, your risk on each trade will start to increase as well with your account size. So this is really good, because that means that your gains will start to get bigger and bigger over time. So gains will kind of start to go up like that, which is quite good. The last thing is probably not having the correct education. So there's a whole bunch of education on the internet. I mean, when I was in the NZ market, when I first started, I knew nothing. I went to the US market for a bit, and then I found out that US market wasn't good for us New Zealanders to trade, because the late timings was the one that kind of got me. So basically, when I was trading in the US market, the timings, I had to wake up at like 2 a.m. and then trade all the way to like 6 a.m. Sometimes there'll be no trading opportunities because, you sit on your hands like this, you're on your laptop and you're watching the markets, and you're like, all right, no patterns yet, all right, that's not working. You have the scanners all set up or nothing on the scanners, and you're sitting there for 5 hours, you're like, all right, no trades, all right, time to go to sleep. And that sucked, because it's just like, you're trying to make an income out of this, and you're sitting here and you're 2-3 days and there's been no trades, because trading opportunities are not going to come all the time. So thank you guys so much for watching the video. I really appreciate all the likes and the subscribes that I get, and all the heaps of questions on Instagram and stuff. Keep at it, and there's plenty of opportunities in the NZ market, and just take advantage. And yeah, I'll see you guys for the next video.